Hey folks, Stubborn Trader here with another weekly stocks to watch video. And first up this week is 888 Holdings, ticker symbol 888. I came across this chart completely randomly, but it struck me how much it's come down from the high to the close. You're looking at just shy of 56%. It seems to be bouncing off some support here now, and really great volume in the last 2 weeks. RSI is ticking upwards, as well as the MACD signal line. Looks like it's about to cross over. Probably going to be a fair bit of resistance around this 270 to the £3 mark. But if we got through there, £4 looks like it'll make a great target. As always, it could still come off and go lower. Any sub 170 price would really nullify the setup here. But overall, looks like a nice trade setup and one that I'll be watching for a good entry with. Horizonte Minerals, ticker HZM, had a fantastic week, up almost 25% on some incredible volume here. If you don't know the story here, Horizonte Minerals is a fairly advanced nickel mine developer based in Brazil. And this week, Glencore upped their stake up to 9.8%, hence all the volume. They last raised at 7p and they should have enough funds to get themselves over the start line. They also have a 10-year offtake agreement with Glencore, so fundamentals here are looking really strong. Chart-wise, this big candle takes us right to the top of the trading range, and this week we'll be watching to see if it continues to be resistant or breaks out and potentially lets the price fly. I'm a holder here, but I wouldn't be unhappy to see the price back off a little bit. I'm guessing that it's probably more likely than the breakout this week. Frankly, I don't see us getting back down to the bottom of the range, and if it was to come off down to say 7p where the last raise was, that's probably going to be a decent buying point. If it did break out and go on a run, first barrier is going to be around this sort of 10, 11p zone. 15, 16p, that's probably good value for the stage of development they're at. And anything above that in the short term, I would say is probably going to be a bit overextended. Long term though, really sound asset, another long term hold for me. One that's been on the watch list for some time, since speculating about a potential cup and handle that didn't play out, is Oilex, ticker symbol Oilex. Even though this cup and handle didn't play out, I'm still looking at a potential trade setup here, which failed to get filled the 2 times I set limit orders. Missing out on some potential nice little gains. It did look like the price might be set to break out after some volatility last week. But this week has been a bit of a disaster, with quite a few pundits blaming the RNS and poor communications about needing more cash. Why am I flagging Oilex as one to watch this week? Well, despite this drop and an overall increase in volatility over the last couple of weeks, the price is back down to this support level where I was eyeing a possible trade a few weeks ago. I would also note that the volume from last week still outweighs this bigger move on less volume this week. Just a small sign that last week's sell-off might be a little overdone. It has penetrated this uptrend line, so it isn't one I would want to rush into, and some follow-through here is definitely possible. Moving to the daily, you can see that Friday's drop left quite a bit of a gap, and this price is closed the wrong side of this point of the control. I think it's worth keeping in mind that RNS didn't say anything about how additional funds would be raised, so a rally before more information comes out is still possible when you consider this is a 40% fall from peak to close. That's got some short-term buy trade potential there. If this support doesn't hold and it does sell off more, then you might want to wait to see where it bottoms out. And I see that potentially as low as this 0.14 level. It's a bit concerning that the price is closed under this uptrend line and underneath this point of control. This 0.18 level may still prove strong enough to hold. So be cautious and wait for a sound trade setup to show itself before you enter here. So last up is request to look at the Ferrexpo chart. Last time we looked at this chart, if you remember, we were falling and around the 250 price level. I did speculate that this long-term uptrend might provide some support, and it actually did, with a little rally back up to £3. Less correctly, I was also speculating I didn't see Russia launching a full-scale invasion, and I saw a worst-case scenario, an annexation of the Donbass region, similar to the Crimea annexation. Unfortunately, Uncle Vladimir didn't agree and proceeded to launch an invasion on all fronts, which seems to be scaled back to a degree now, perhaps presenting less of an impact on the Ferrexpo operations. Chart-wise, the past couple of weeks has been showing support around 165, and you've got these long bottom wicks that have been showing that their spires anything sub 180. Flicking to the daily, you can see there's clear support around the mid 160s. The VWAPs from the last high and last lows are almost converging around this point of control. The price is just under this 50-day moving average, creating a bit of a trading range here. There was a good update last week, still producing despite the war, and reported net cash position was $159 million as of March. If I was to take a guess, I would say the 160s will definitely be revisited. And if it pounces, this will start to look like a strong base. If it breaks, then I would suggest a retest of the lows might be possible. Maybe you find support higher, around sort of 145 level. Long term, once this is over, and assuming that the mine and operations are still in one piece, I'm still bullish on Ferrexpo. One caveat here. There's still a lot of unknowns. Keep in mind, almost anything can happen. This stock could be argued to be as much of a punt as many other Russian stocks, and it's still priced as such. So don't be surprised if volatility picks up again. And that really could mean a range between £1 and 260. Short term, I'm more biased towards the price slipping down, and this chart looks to me needs more testing of support. When you throw in the apparent determination of the Ukrainians and the seeming escalation of Russian air and missile attacks, you can kind of see why I think that. Of course, peace could be declared tomorrow and the price could jump 50%, and wouldn't we all be happy with that? So as always, if you got anything from the video, smash the thumbs up button. Disclaimer bit is always to do your own research. Anything in this video is purely for entertainment purposes only. Any chart you would like me to look at, drop a comment down below or send me a tweet. Hope you have a good week, and I'll see you in the next video.